Active Investor here, bringing you another independent analysis. This time we're taking a look at ticker symbol XGTI. The chart we're looking at today is going to be a 30-minute chart. Each candlestick on this chart representing 30 minutes of trading. We go back to right around the start of this reverse split. And I will give a shout out right away to Juan JHP. Hope I pronounced your name right. I think I did. And I will say that this was actually a bit of a tough analysis for me to do. The main reason for that is there's not much data from 156 to $1.14. Not much historical data. So the last historical data we have really is right around 114, and that's going to be this dotted line right here. $1.30 and $1.45 have not been tested all that much, but they were tested, recently. We were testing 145 as support over here, and over here, and then it became resistance over here and over here again. 130 was tested as resistance all along here, and then it became support, so it was like resistance, and then support, and then resistance here. So 145 and 130, while they are hard support and resistance, they are very new, so let me put that out there for you to know. Now 113 and 90 cents, these lines are dotted / segmented, because they are soft support, soft resistance. The reason for that is because the historical data, we had a daily candle that went all the way from $2.89 to $1.55, and the next day we fell down all the way to $1.15, and we closed all the way at about 90 cents. So there's this space between $1.55 and $1.11 historically. And 145 and 130 are recent pivot points, but they have been tested a decent amount of times over here and over here. So just keep that in mind. And then the last hard support we have is at 69 cents. So soft support 90 cents and 69 cents. And hopefully we get back up to $1.13. I think there's a good chance we do, and then that can become some soft support. But ideally we get back to this $1.30 area and we channel between 130 and 145. But I don't think that's going to happen just yet. The best case scenario for now, since we closed right below 113 on that segment, we closed actually, let's see. You take a look at the shorter time frame right over here. So yeah, interestingly enough, XGTI looks like it closed right around $1.17, but then there was this trade all the way after hours at $1.11, and that's reflected right here. So, if that after hours trade was just some guy getting a lucky fill or something, you can kind of just count that out, and we can really focus on the fact that we closed at $1.17, which puts us still in this channel between $1.13 and $1.30. So ideally, the best case scenario for now is we channel between 113 and 130, and then get enough bullish pressure to break up, and then channel between 130 and 145, and then we can break 145, we can go for that test of 183 once again. But keep in mind that, let's see here, there might be some resistance right around the $1.50 area. So if we break 145, we could see some soft resistance around like 150. That's so close to this pivot point, I didn't really include it. Just keep in mind 145 resistance. We might have a little bit extra, give or take about 5 cents on that. Consider that 145 / like 150. So if we break that 145 / 150 area, then we can really make a push for that 183 high. But in the meantime, the chart isn't looking that great, man. I'm going to be honest. It's not looking terrible either, though. A few reasons for that. Obviously, we've been downtrending, After the reverse split, we were trading up here, and we had some lows there, and then I actually made some higher lows, but only once, and then it was lower lows, lower lows, lower lows, and once again lower lows. So we don't want to see that. The averages, they're really tough to look at because after a reverse split they get all funky and strange, and though they are telling us obviously that we're in a downtrend, over here they start to get a little more normalized. We have the 50, the 20, and the 13. Still take the averages with a grain of salt because they are still probably adjusting to that reverse split. Relative strength index we can take a look at though. So let's see where we went oversold over here. Well, let's make that a little more accurate. It would probably be that candle, yep. And we're not oversold entirely yet. And let's see, if we count this little trading block here, the after hours one, we were still actually right around no man's land. You can see the averages were right around here. So we could start turning around, you know, no man's land, anything can happen. We can turn around and get back to the 80 line and become bullish, or we break back down and go oversold and become more bearish. So I'm not really counting this fast average since I'm not really counting this after hours trade. That thing only had, let me check the volume on there, only had a volume of 600. So really I'm not counting that. We'll see what the pre-market is on Monday, and if it's trading, you know, in that low range, I'll be really surprised. But I'm thinking, yeah, we'll get back into this range from 113 to 130. So not counting that, let's put that line back. That means our RSI is in no man's land, and we could easily just start working our way back up above the 80 line, and that's where we can see the run, or at least a little bit of progress, as we saw over here when we broke above the 80 line. You know, we went from about $1.50-ish and made that high of $1.83, then came back down, and still at the end of that RSI, we were still higher than over here. And then once we broke from overbought, that's when we started selling off. So ideally, the RSI starts turning around. We don't really test down here. Worst case, we test the 20 line and break back up. That's what I'm hoping for. And then that would mean that the soft support at 113 holds, and we can really start testing that 130 resistance and hopefully break that. And if we can get back to 130, 145, that'll be a much stronger channel than the 113 to 130 channel. So the last thing I will mention is the volatility on this thing. So let me pull up a little more data here. 1 second. So the volatility is kind of dying down, which could be good. I mean, we're going to kind of see that channel. So if the volatility dies down, like I said, we will probably channel between 113 and 130. And then as the volatility comes back, hopefully it's to the upside and we break into that channel between 130 and 145. And that's really all I got to say about this one for now. Let's see what it does pre-market Monday, and maybe I'll update this analysis. But yeah, if it breaks into this 130, 145 range, I'll update this analysis and maybe look for some higher areas of resistance on the way up. But if it kind of just stays around here or breaks down, I'm going to hold off for now since we already have the data here and here. So let's see what happens Monday and next week. And I hope this was at least a little bit insightful for you. Just be careful if those support levels don't hold. Then this could start getting ugly. But for now, I think it's worth giving it a little more time to see if it bounces. So anyone who watched this, I hope you enjoyed. And Juan JHP, hope this helped you out a little bit at least. And I'll catch you guys in the next video. Have a good one.